Hello, this is Michelle Savage with XBRL US. You are here for the webinar, DQC Rules for Business Development Companies and Public Companies, Rule Set 20. Thanks everyone for joining us. As we go through the program today, if you have any kind of technical issues, please contact us by emailing support@xbrl.us, and we'll do our best to get you back online. We are doing CPE questions during the course of the program today. So if you have requested getting CPE, or even if you haven't requested but you'd like to, please be sure to respond to the poll questions that we'll be taking at 2 points during the session today. If you've not signed up already, don't worry, we'll make sure that you get your certificate and follow up with the administrative side a little bit later. As we go through the presentation, if you have questions, please click on the Q&A link that you see on your screen, and you'll be able to submit your questions there. And we'll take those questions as we go through the program. With that, I'm going to go to the next slide covering the agenda we'll be covering today. First, we're going to talk a little bit about the XBRL US Center for Data Quality and the Data Quality Committee, which is led by Shelley Wavrin. Shelley chairs the DQC. She's also Senior Financial Consultant at Topan Merrill. Then we're going to move on to CPE questions. And then Campbell Pride, who's President and CEO of XBRL US, is going to be covering Rule Set 20 for BDCs and for other US GAAP issuers. Finally, we'll cover the last set of CPE questions and then do upcoming programs and events from XBRL US. So with that, I'm going to turn it over to Shelley.
Thank you, Michelle. The Center for Data Quality is driven by a shared mission to improve the usability of XBRL data. It is a collaboration of public companies, service providers, and data users. Next slide, please. The focus of the Data Quality Committee is to identify and eliminate issues that impact data quality. So based on the input from the users, we create guidance and rules that can be accessed free of charge by all users. We also provide progress updates and communicate issues identified in our work to the SEC staff and the FASB. Now, we're committed to publish 3 rule sets each year. This year in 2022, the rule sets developed by the DQC are version 18, 19, and 20. Now, version 18 and 19 of the DQC rules have been approved and become effective. And together with rule set 19, we also published a investment guidance FAQ. This guidance is intended to supplement the FASB's implementation guide on the topic of financial instruments, debt securities. And then version 20 of the DQC rules was just released for comments on November 15th. Campbell will talk through the details of this rule set later in this presentation. Next slide, please. So this slide shows the names of the members of the Data Quality Committee. Now, in addition to this group, there is the Data Quality Working Group that meets twice a month. Michelle, next slide, please. So this working group would propose topics for consideration and develop the DQC guidance and validation rules. Those participants are listed on this slide. We really appreciate these members' contribution to the development of the DQC rules. Next slide, please. So far, the DQC has approved a total of 99 rules since 2015, and that's when the first rule set was released. Out of the 99 DQC rules, 76 apply to US GAAP, 14 for IFRS, and 9 DQC rules are for both US GAAP and IFRS filings. Now, our latest rule set 20 contains 7 new rules, and they are checking the US GAAP filings. That brings the total DQC rules to 106. Next slide, please. In addition to the free of charge validation tool on the XBRL US website that anyone can use to check their filings before the SEC submissions, we also publish the data quality results for all individual submissions. Now, as you can see on the screen, you can check whether a company's filing contains any DQC errors and the details of the errors by searching the name of the company. We also publish the aggregated real-time filing errors. These are the interactive graphs that you see on the right that shows the changes in the total number of errors identified by each of the DQC rules. Next slide, please. Now, in the next few slides, I want to emphasize that the SEC ecosystem supports the DQC rules. Let's move to the next slide. We have been collaborating with the FASB to include a selection of the DQC rules into the US GAAP taxonomy. The taxonomy that contains the DQC rules is called DQC Rules Taxonomy, or DQCRT. The DQCRT was first introduced in the year 2020. So far, 15 rules have been added to the DQCRT. And we know more and more DQC rules will be added in the future taxonomy releases. Now, next year in 2023, the FASB is proposing to add 7 more DQC rules in the taxonomy. So that will bring the number of DQC rules in the taxonomy to a total of 22. And the SEC ecosystem supports the DQC rules because the ecosystem will actually produce a test filing warning for any violation of the DQC rules that are included in the DQC rules taxonomy. So filers should address the DQC errors identified when they see them on their SEC test filing results. Next slide, please. So this slide shows you that the DQC rules taxonomy is a part of the US GAAP taxonomy, and this taxonomy is incorporated within the ecosystem and supported by the SEC. Next slide. So filers are strongly encouraged to use the DQC rules before their SEC submissions. In this slide, you can see a listing of the DQC certified software and their respective certified rule version. And as mentioned earlier, the validation tool on the XBRL US website is free of charge and it can be accessed by all users. That's all I have for this part of the presentation. I'm going to hand this back to Michelle.
Shelley, thanks very much. We're now going to take a couple of poll questions for those getting CPE credit. So I'm going to go to our first poll. Okay, so the first poll, and you should, hopefully you'll see it's on your screen, is how many DQC rules have been approved and are currently available for use? Is it 99, 106, or 7? Okay, just about another 30 seconds for this question. And we did get a question from the audience about getting a copy of the slides. And yes, the replay will be posted, and we can also post a copy of the slides as well. Okay, just like another 10 seconds. All right, I'm going to close down this poll. And the correct answer to that was 99. Okay, we'll go to our second question. Which organization maintains the DQC rules taxonomy, also called the DQCRT? Is it the FASB, the Securities and Exchange Commission, or is it XBRL US? Okay, just like another 30 seconds for this question. Okay, I think we're going to close this poll down. And the correct answer to this one, who maintains the DQC RT, is actually the FASB. So with that, I am going to turn it over to Campbell Pride, President and CEO of XBRL US. Campbell?
Thank you, Michelle. So we're just going to go through some of the new proposed rules that are being put forward. And if you have any comments on these rules, please get back to us and let us know if you think there's a mistake or there's a special circumstance that doesn't apply in certain circumstances, and then we can update the rule for that. If you want to run these rules, there is a site, there is a location on our website where you can normally run the rules. It gives you the option to also run the DQC rules of these proposed rules. And if you do get errors for them, have a look at them. And if you think there is a problem, remember, please get back to us, and then we can change them. They're not binding at this point. They're out for public comment. And then you can also, if you think they could be improved in some way, we'd love to hear that as well. And just so everyone understands, the guiding principle here is we try not to have any false positives. So if you get an error for one of the, once these rules have been implemented, if you get an error for it, it should be highly likely that it actually is a mistake, and it's not a false positive, because we try to eliminate them. And one of the processes to do that is to get feedback from folks telling us that, this rule is wrong under certain circumstances. And it's always, some exemption for some certain condition. And we're very, very interested to find out what those are so that we can make sure we incorporate those in the rule. So I'm going to go through the rules today, and there's a couple of rules. Most of a couple of these rules relate specifically to business development companies. We have actually made some updates to some of the other rules that have already been published, so that BDCs don't get errors as well. So there's a couple of additions we've made to some of the existing rule set. So if you are a BDC and you've filed and you see an error on rules other than this rule, 142 and 143, the next two, then please let us know, because we may have missed some condition. But we think we've generally picked them all up, but if we haven't, we'd like to hear it. So this first rule, let's just go through these. The first two rules are specifically for BDCs. They don't really affect anyone else. And this first rule is basically checking the schedule, where you list out all the individual positions of the investments that the BDC holds. And so this is actually, there's a lot of data in a number of these schedules. And there's a requirement that the values for every single instrument that are reported by the company by the BDC is actually reported, and they need to use different dimensions to do that. And those are type dimensions. And there's an expectation that depending on the class of what the investment is, there will be different type dimensions that you'll use. You could either use, and these are listed here, the investment identifier axes, the security sold short axes, open option, basically for covering options, covering futures, forward, foreign currency contracts, and open swap contracts. So depending on the type of investment that you have, the expectation is that they would be grouped on one of these axes. And what this rule checks is that if you've used this axis, you can't use any other axes excuse me, with the fact value that you've reported. And this follows the guidance that's been issued by FASB. That's where this comes from. So if you've got a subtotal and you've put another dimension on for a subtotal, but you've also included one of these axes, this rule is going to report an error to you. There is one exception to this. You can put additional axes on a fact value, and that's in the case where you're reporting a non-consolidated subsidiary, and you're reporting the investments for that. for that non-consolidated subsidiary. So if I'm the entity reporting, and I've got all my own investment securities, but then I'm also reporting those for the non-consolidated sub, then you're going to need that axes as well. So that's the only case where you could, on a the face value or the interest rate of one of these loan, let's say, that you've made, you could have these two axes. So this rule checks that. And then this rule will run for every single fact where there is an error. So if you've put multiple axes on multiple facts all over the place, you could get lots and lots of errors. So hopefully, most of that would be those issues would be pretty easy to resolve. But what I would suggest you do is, if you're preparing the schedule, tag a few values and then run this rule, and then make sure that maybe tag up a page or something, and then you can then make sure that you're not getting this error. You don't go down the wrong path. Initially, we had seen, when people were first starting to look at this, this was unclear. This guidance was unclear by the FASB, and that's why this rule was added. So you don't want people in the situation where they go and do all this work and tagging all of this schedule, because then to fix it would not be pretty. So hopefully people see this rule and they run it early, and people are aware of the guidance from the FASB. So that's the first rule: type dimension axes restriction. So if we go to any questions on that? No, doesn't look like there is. So the next rule, this is a rule we added that the FASB had just wanted us to clarify in a rule. And so what this rule checks is that there's an element where you can report your derivative position and what's called an extensible enumeration. And this is really indicating whether on an option, whether the position is a call option or a put option, and they wanted to restrict the values that you could put in this extensible enumeration to either call option member or put option member. So that this rule will just check that. We haven't seen any errors for this yet. I think it's pretty straightforward, but this is just to prevent people putting the wrong value or misspelling a value in this extensible enumeration element. So that's what this one is. So it's a pretty simple rule. And this is probably only going to affect very few filers, but we've added this in as well. Here we go, the next rule. Those two rules, those first two rules really were just specific to BDCs. They're not really going to affect other filers. And that was really just to help people when they're preparing their BDC filings, to make sure that they're getting it correct from the start. We will expect that there will probably be more BDC rules added in subsequent releases, but we're not sure the type of mistakes people are going to make yet. So these rules are preemptive. We don't really have an idea of how many people have made this mistake because no one's really reported it yet. Okay. We have noticed while looking at filings, we've noticed that generally, as people have moved to inline XBRL, the focus on making sure that the presentation is correct is not as easy to determine, and less people are looking at the SEC rendering page, because now they just see it all in line. But as a result of not looking at that, there can be some issues that get introduced into the filings because they're not inherently obvious when you're doing the inline XBRL filing. So these rules are really trying to facilitate making sure that the filings are prepared correctly, and trying to make these problems a little bit more identifiable if you're not looking at the SEC renderer. And at some point, the SEC may choose to phase out the SEC renderer. We don't know if they will or they won't, but these rules are intended to make that option possible, so that people can, the problems can be identified. So there's a couple of issues that these rules are trying to pick up. The first one that we've noticed is on extension elements on the face financial statements. A number of companies are failing to provide balance attributes on those elements that they're adding. And this is a problem because if anyone's looking at this data and you create an extension, if you don't indicate whether it's a debit or a credit, that can make it difficult for people to understand what that element is. If something is on the balance sheet and it's a debit, then obviously it's clearly an asset, and if it's a credit, it's clearly a liability or an equity item. But if you don't have a balance on it, then it becomes very difficult to determine what it is. And for some reason it's not in a calculation, or in the calculations it's not inherently clear, if it's on the cash flow, for example, then this becomes a problem. So this rule is picking up what the balance is, picking up those elements that either appear in the balance sheet, the income statement, the statement of comprehensive income, statement of cash flows, or statement of shareholders' equity, whether the item has a balance or not. So if you see this error, all you need to do is add the balance attribute to that extension concept that you've created. No matter how many facts you've created, if you've got 3 facts associated with that element, this will only create 1 error. So it's just really looking at the concept specifically. Okay, can we go to the next slide, please, Michelle? All right, so inappropriate cash flow presentation. Some of you may be aware that we have a bunch of rules related to cash flow, and these were rolled out a number of years ago. And so that's generally picking up problems in the cash flow statement. But what we've noticed, and this kind of relates back to the SEC viewer, to the SEC renderer, is in a lot of cases the presentation of the cash flow is being messed up. In particular, in a number of cases, some examples of this, there's the investing section, and then as a child of the investing section, we're seeing financing section. We're seeing changes in cash flow. The change in the cash flow, or the effect of the FX change, is appearing under the financing item. So when, under the financing abstract. So as a result, if you try and render this data and you try and look at the data just based on the XBRL, you'll see these items are kind of all in the wrong place. And if you're trying to programmatically access this information and trying to find out what the financing items are, and you're looking at them, and you're looking at the presentation, you're gonna have an issue. So what we want, this rule does is it looks at the presentation for both the operating section, the financing section, and the investing section of the cash flow statement, and it checks to make sure that items from the different classifications are not children or descendants. So it will go and look, is financing a child of investing? Is financing a child of operating, investing a child of financing, et cetera, et cetera, et cetera. So then this rule will go through and it will look at the presentation, and it will determine if, by comparing it to the US GAAP taxonomy, and then determine if you've got if the presentation has been messed up. And I didn't think this is such a big issue, but there are a number of filers out there who are doing this. And sometimes it's just difficult to, it's just a mistake. The tree gets dragged under the wrong abstract. So this just helps to identify those cases so that they can be fixed. Okay, if we go to, so that's rule 145. Okay, the next rule is looking at incorrect period reported. And what this is looking at 10Ks and 20Fs, and it's making sure that there's a valid annual period reported. In some case, there are a couple of filings we noticed where, they had no annual data reported in a 10K, and they had a 31st of March year end, and basically the period that they were reporting was the whole year. It was from 31st of March 2021 to 31st of March 2022, but the starting date on it was the 1st of January 2022. So they thought they were reporting a year, but they're only really reporting a 3-month period. So this rule's trying to pick up, if you've got a 10K, we would expect you to report for that period, for the 10K that you're reporting, that you would be reporting the values for an entire year. That was the intention of the rule when originally designed, and it picked up those cases. However, there are a number of other cases where you don't report the data for an entire year. One of these could be, there could have been a bankruptcy, and there could be a successor and a predecessor. So the rule has also been changed to, if you don't report an entire year, we go and look to see there's an extensible enumeration element that you should tag, and then you can put the successor. You can indicate that this is a successor organization. So if you get this error, it may be that you just need to go and look, oh, okay, this is a successor. We're only reporting a partial year because they had the predecessor company before. So if you flag that, then this rule won't flag. So it's really helping to pick up whether you've indicated if it's successor or not. The other reason that it may not be a full year, and this is the case for many SPACs, is that it hasn't even been in operation for a year. They're doing a 10K, and let's say they've only got 9 months operation. Basically what the rule will indicate on that is say, look, this is a starting period. We don't have a full period of reporting, and you can create an extension element to flag that. Then the rule will see that and will say it won't flag in that case. So there are, just to summarize the conditions that we have in there. The rule it'll only run for a 10K or a 20F. If it's a transition report, if you indicate that it's a transition report and you have to do that using extension, then it won't flag. If it's the year of inception, it won't flag. You can use the DEI element, document transition report, and if you indicate that's true, the rule won't flag. And if you indicate using the concept, there's a fixed list element called financial designation, predecessor, and successor fixed list. And that's all documented in there in the rule. Then the rule won't flag as well. So we're trying just to really pick up those cases. One where a company may have reported the period, the annual report, that they're reporting incorrectly, and if they haven't reported a full year, then they should indicate whether it's a transition report, first year of inception, or it's a successor. So this is what this rule is trying to do.
Campbell, we did get a question. I'm not sure if you've answered this, but the question came in: does this income statement duration rule allow for transition period for change of fiscal year?
Yes. And but you have to tag that. You have to tag that element to indicate that.
Okay, great. Thank you. Should we go on to the next rule?
Yes. Yeah, but that's good feedback, right, on that question. And if you're looking at these for public review, if there's another case where you may not report a whole year, please let us know, and then we can make sure that we can look for something in the filing that indicates that condition and not flag for those cases. Okay, incorrect sign of elimination items. This really applies in the case of where you've got a consolidation schedule, and maybe there's a segments being added up. But what it's doing is it's looking at those items on the consolidated items axes, and it looks at the eliminations member. And generally in eliminate, one of the problems that this rule is trying to address is in many cases companies will report this data, but in the XBRL, because it's trying to add them across, it expects that the elimination value is entered as a negative amount. Now, we have a bunch of non-neg rules. The non-neg rules don't look at anything that's an elimination member because it doesn't know, sometimes they could be negative, sometimes they couldn't. So it basically excludes those from any non-neg checks. What this rule is specifically doing is to look at those elimination members and make sure that they're actually being deducted from the amount that's been reported. Now, there's a wrinkle in that because obviously, if the amount that's reported is negative, then the elimination is going to be positive. So what this rule tries to do is it goes and it looks at that elimination, it goes and looks at this elimination member on the consolidated item axes, and it looks at the other values, and then it makes sure that if you've got positive amounts adding to a positive total, that the eliminations should be negative. And if the other amounts are negatives, and then if the other amounts are negatives, and then this amount is negative as well, then the rule, the rule is in those cases actually is ignored. So it won't fire. It won't check the opposite, that, hey, if everything's negative, this should be positive. At the moment, it's just checking the elimination items to make sure that, you're flagging those as with a negative value, because that seems to be the case where people, when filers are filing, not in all cases do they realize, these eliminations should be entered as a negative amount. So that's what this rule's checking. So it does that by looking at the filing and looking at the values of the default values and seeing what the sign on those is, and then basically coming up with the conclusion that the amount's going to be negative or not. The other thing to know about this rule is that it only works on the those elements that are included in the list of non-neg items. Sorry. Sorry. It only works. It'll work on any item, but it includes in it the logic that's included for the non-neg item. So what this means is the rule won't run if, for some reason, you've got, let's say on the elimination, you had an adjustment, or you had an elimination on the elimination, or you had one of these other axes that we've indicated in the non-neg rules, which is rule 15, that says, hey, this value can be negative. And there's a bunch of cases if that's the case. So if you had the elimination member, then you had another axis on it with an adjustment member, then this rule will not flag. So it's not going to fire in all cases. It's only going to fire in those cases where the that elimination member is pretty much used by itself, or if it is used by another dimension, we're going to check that other dimension and make sure that it doesn't reverse the sign of it. And this rule is going to only operate on those facts, which are obviously numeric values. So that's what this rule is doing, and it was really just, the FASB had brought this to our attention, and they were seeing a lot of cases where these elimination items were not have the appropriate signs on them. And the way that the non-neg rule is written at the moment, and the non-pos rule that we have, it's not going to pick, these are excluded from the logic which runs on those rules. Okay, we go to the next slide, please. Okay, so OCI items and income. When we're looking at a number of filings, we were noticing that this was coming up in some cases where folks would be taking OCI items, other comprehensive income items, and then taking those items and including them within the income statement. So what this rule does is it goes and looks at the items that are OCI items, so this may be, something like, maybe it's related to, you define benefit plan, and it's something that should be going into OCI. And then it checks, goes and looks at the income statement, and then it goes and looks against those preset list of items which are defined in the taxonomy that are OCI income or expense items, and make sure, usually gains or losses, that those are not included within the income statement. It does not include it does include reclassifications from OCI into net income, because that reclassification is from the OCI side. So if it's the reclassification item indicates the movement out of OCI into income, and that element's used in the income statement, it will give an error if the balance attribute is inconsistent, right? So if the reclassification reduces the income, then obviously it's going to be a debit, and then that's going into, and they've gone and put that in the income statement as a debit, that's a gain, and so it's not an expense, obviously, on the income statement side, it's a credit. So it's going to flag those cases. And those, very rare that someone would put that on the face of the incomes, but if you do, and you do find that problem, then you may have to create an extension element for that reclassification if it doesn't exist in the taxonomy. and this was causing problems because then we were having these OCI items, particularly the reclassifications that are coming in there. The weight would be the wrong way rounds, and they'd put the sign on it the opposite way, and it kind of would mess everything up. So it's fixing that, but it's also identifying those cases were just a general in gain or loss that should go to OCI. People kind of filers look and they say, oh, this element looks close enough because they're just searching the taxonomy, generally not where it is. And then they go and stick it in the income statement because it's a gain or loss on a security or whatever it is. So this rule is picking those up. So if you see that, that's the reason. And then what you need to do is you need to go and look at the income statement and making sure you're choosing an appropriate element from the income statement. Don't use the OCI item there. So, any questions on this rule? Okay. Just to remind everyone, we do have, if you haven't seen this, if you want to look at more detail, just around the rules that have already been written and the types of errors that people are having, we do have an Excel add-in. You can go and you can, if your company lets you install Excel add-ins, you can install an Excel add-in into Excel. And then what that does is allows you to query. You can actually query by errors, and you can go and see the types of errors that are being made, and has, you can get every single error that's been made for the last 10 years related to a specific rule. So that can be helpful too if you're trying to understand what the rule is. Maybe you want to go and look at some of the filings and see where others have made that same mistake. So that is available. I don't know if we've walked through, and I think we've in the previous calls have shown people that, but if you go to Excel, you can go to the store and get the add-in, and you can install that. And then then you can go and look at these errors. You can also, with that Excel add-in, you can also validate your filing within the Excel add-in and get those errors back in Excel. So if you want to see more on those types of errors that are coming up for these rules, you can do that. That Excel add-in doesn't include the rules that are currently in public review. These rules you won't be able to download because obviously they're not published yet. These rules are currently, the public review finishes at the end of this month. Then the rules themselves will be rolled out, and then I think, Shelley, I don't think we've set the exact date for when they will become final, but usually it's probably going to be 60 days after that. So these rules will probably not be final until the end. Do you know what date it is?
We haven't decided, but I think, in the past it's generally April 1st or May 1st.
Yeah. So, I even though these rules won't be, be required until April or May, it pays to run them because sometimes these just help you find silly errors in the filing. A lot of these are just really formatting type issues, and you probably want to fix them anyway. And most of these are not going to be hard to fix.
Campbell, we did get one question on what kind of feedback you're looking for related to the rules, and what's the best approach for issuers to take as they consider these rules.
So on our website, you can just write a note on our website, or you can send it's probably the best thing to do is just to put a comment up on the website. And then what I would do I would take my filing and then just run these rules against my filing and see if I have any issues, and then have a look at it and then say, okay, yep, we need to correct this in the next filing. Or if you see an issue, it's like, oh no, this rule's not valid because you're not looking at X, Y, and Z, or there's a special case where this won't apply, or like on the eliminations, if there's some reason why, and for certain elements, the eliminations are, the sign goes the other way, there may be something that we've overlooked. So if you see that, just a brief note on what the issue is, then we can look into it. And if you have an example filing that you've already filed, that would be helpful as well.
Great, thank you. Okay, I think that's it for questions, and I think we'll go on to our CPE polls. We have a couple of CPE polls for people to take. Any final comments, Campbell and Shelley?
Yeah, the only thing I'd say is just, and Michelle, you may want to show that where people can go and can run these public review filings on their website, on our website. And so then you can check it. I would encourage people to do that. And even if you don't want to give a comment back, it can be useful just to make sure that your filing is correct. Because we run into these issues. These are issues that come up from people trying to use the data. So, it's not like these are esoteric issues. They don't affect probably it's not like they affect a significant percentage of the filing community, but they are kind of annoying issues. And Michelle showed.
Yeah, that's what I'm showing here. This is the section on our webpage where you can go ahead and check your own filing. And there's also a lot of information here that you can look at here's the approved rules. You can go into the, public exposure. You can go into, a lot of different areas here to check for various pieces of information that we posted.
Now, to run the rules, you have to log in, and you can log in if you've got a Google account. You can log in with the Google account. If you don't have an account with us, then it doesn't cost you anything. You can just basically create an account on our site as well. The reason we do that is so we just don't have, we know who's running these rules, and there's no information that's collected from running them. And if you want, if you feel uncomfortable with that, just run a filing that you've already filed with the commission as well. And then that way.
Yeah, we're also getting a question actually from Scott Tice. What file within the US GAAP taxonomy are the FASB published DQC rules located in?
Which file?
And actually, I can stop sharing them and try to pull it up myself. I just want to find it first. And
they have a separate. They have this published separately. They do have it on their viewer. They're not included as part of the UGT. They're included as like a separate entry point. So if you open the UGT, these are not going to pop up to you. You've got to go and open them as a separate file and then that will then open the UGT.
Yeah, I'm showing it right here now, Campbell. If you go to this is the public review for the US GAAP taxonomy shown in their taxonomy viewer. And if you go down to US GAAP 2022, you get the entire taxonomy, or you can pull in the DQC rules taxonomy. So if I click on this here.
Okay, so Michelle, on the network, you have to drop it. Yeah, select the rule concept.
Mm-hmm. Yep. Here we go. So this is showing, Shelley had spoken about the 15 rules that are now available that are right here. And then you can open these up and, get more detail about each one. Okay. And I'm also getting a comment in actually from David Shaw from the FASB, who says the DQC RT are published in a separate directory with the US GAAP taxonomy. Okay, 2023 is on this link. Go here. I think that's okay, so this is the 2023 rules taxonomy. Thanks, David.
Yeah, and you'd have to open that obviously with an XBRL taxonomy tool.
Right. Okay. So if we have more questions, require software review. Okay. If you have more questions, please submit them. Why don't we go ahead and go on to our poll questions, our final poll questions for the program today. Okay. So which of the following rules is specific to business development companies? Is it type dimension access restriction? Is it no balance attribute in financial statements? Or is it incorrect period reported? And then we'll take about another 30 seconds on this question. We're about to close down the poll here. And the correct answer to which rule is specific to BDCs is the typed dimension access restriction. So we all got that. And to our third question, or fourth poll rather, which of the following is not an acceptable value for the derivative position extensible enumeration? Is it call option member, issuer created custom member, or put option member? Which one is not an acceptable value for the derivative position extensible enumeration? About another 30 seconds. I think we're going to close this poll down, and the correct answer, which is not a possible value for derivative position extensible enumeration, is the issuer created custom member. Right. So let me go back to my slides again. Bear with me a second here. Okay, well, I want to thank everyone for
Michelle,
attending.
just before we go on to that, I just
Sure.
one of the things that's not on the slides for the rules, they just so people are aware of this. For rule, there was one of the rules we did do an update to them as part of DQC 20 was for version 20 was an update to rule 43. And this is just on the cash flow again, while we're looking at the cash flow stuff. The in some cases, folks were subtracting net income from continuing ops, and then to make it work, putting negative net income in on the cash flow statement, but making it look positive on the. I don't know why people are doing that, but there were like 20 filers who were doing that. So just if you see a rule for rule 43 that you haven't seen before, it's because there's a problem with your calculation for net income rolling into continuing ops. Sorry, that was not on the list. Just a correction of a previous era, but some folks may run into it.
Great, thank you. Thanks, Campbell. Okay, well, I want to thank Shelley and Campbell for presenting today, and thanks to everybody for joining and participating. I just want to mention an event that we have coming up in February, actually. And I apologize, I do not have the date on here, but it's for February 2nd, and it's going to be, I believe, at 1 o'clock Eastern. And it's a webinar on digitizing environmental social governance, ESG disclosures. So that session is going to be an interesting one. We're going to get an update from the IFRS Foundation on activities ongoing globally related to ESG. And we're also going to hear and see a sample XBRL report for the Gap, the retailer, the Gap, in XBRL format. So that will be using the ISSB taxonomy, which some of you may be familiar with. So please join us in February, and we'll have more events coming up probably even in January that we just haven't finalized just yet. But thanks again, and let us know if you have any questions, any other ideas for other webinars, and we hope to see you on our upcoming events.